front of this house as we begin this debate. This house believes that Alibaba, Amazon, Apple, Facebook, and Google are a bigger challenge to traditional banks than any fintech startup. How many of you agree with that sentiment, that these internet giants are a bigger threat? Okay, make some noise. I want to see it. Okay, these are the people in favor. Okay, how many people disagree? How many people are against this motion? Think it's rubbish. Don't agree with it at all. Well, this is extreme. I'm going to call this 85% in favor, given the scanty hands that I saw for the con team. I'm going to welcome the first speaker in favor of the motion. The floor is yours, sir, and you have your time. Please give him a round of applause to cheer him on.
Thank you. So I've learned that the key to winning a debate is to bring your own bottle. So
I've learned the value of that as well. Yes, hydration, everyone.
So my name is Arun Sundararajan. I'm a professor at New York University. I'm delighted to be defending the House proposition. So the mindshare of platforms like Alibaba, Apple, Google, Facebook, and Amazon is staggering. These digital platforms have become sort of an increasingly important interface to a wide variety of facets of our life, from how we find information and consume media, to how we book travel, to how we interact with each other, to how we buy. They're making inroads into healthcare, into transportation, into financial services. And more importantly, over the next decade, much like the desktop was surpassed by the mobile interface, over the next 10 years, the mobile interface is going to be supplanted by the artificial intelligence interface. We've seen Amazon Echo, we've seen Google Home, we've seen Apple Siri. These are early examples. Now, why do we care about that? Well, the AI interface is likely to need and therefore lead to a much tighter integration of services into the platform and a sort of like a marginalization of third-party applications in general. It doesn't matter what industry you're in. If a digital interface touches your industry, chances are that one of these big platforms is going to take share from you. Not only will platforms have the interface advantage, but they will also have the data advantage. Eventually, the core of many financial services is managing risk intelligently. Google, Facebook, and even Apple have far richer data sets to assess and price consumer financial risk than any bank has today, let alone a startup. I mean, just think about how much they know about you. I mean, take a moment. Think about how much Google, Facebook, and Apple know about you. Similarly, Amazon and Alibaba have troves of data about small businesses. We're long past the days of PayPal.
2 minutes.
Where a startup could create superior ways of managing the risks associated with a fringe business and then sort of expand from there. Now, the platforms are paying attention, and so anything that a startup does can be easily replicated and can be instantly better because the platforms have better leverage because of deeper data. Thirdly, there's the issue of trust. We have entered an era in which trust in traditional institutions has been plummeting. In parallel, trust in large brand name digital intermediaries has been growing. Trust is central to financial services. Platforms are the natural heirs to government. Standalone innovations like blockchain, like Bitcoin, will continue to enjoy their niche markets. The core mass market services are likely to remain the domain of trusted branded players. One might think there are regulatory barriers that will cause these platforms to falter, to say, well, I don't want to become a bank. The counter-argument there is that these platforms are going to cherry pick what's the most profitable in financial services and leave the regulatory mess to the banks. You might say that innovation is like, sort of in the wheelhouse of the startup and not the big platform. Again, not true. Think about where the most innovative technology products have come from in the last 10 years. Platforms can replicate innovations that they see come out of startups very fast. What about blockchain, you might ask? To me, that's a red herring. Whatever the technology, many financial transactions still require intelligent intermediation. We are a generation away from mass market services
30 seconds.
That are completely free of branded intermediaries. And we've seen how large incumbents can co-opt the distributed database, the identity, the trust, the security features that blockchain technologies to improve existing intermediated services. To summarize, platforms have the interface advantage, they have the data advantage, and they have the trust advantage. They can weave past the regulatory barriers. They have a proven track record of both innovating and imitating, and they can co-opt the blockchain. They have a huge advantage, a huge sort of upper hand over the startups.
All right, very good. First opening comments. Give them a round of applause. Thank you. So we heard about the juggernauts, these platforms that are going to co-opt any kind of innovation that comes from the other side that are going to touch all our lives. They seem to have ways of being both large as well as maneuverable because they're weaving around the regulators. So we've seen a picture painted for us from the side in favor of the motion that tells us that the great technology titans of our age, whom some see as the great menace of our age, the new Gilded Age, in fact, are going to be the winners in this upcoming battle. Let's see from the side opposite. What do you say? Give them a round of applause. Welcome our debater to the podium.
Thank you, Vijay. Thank you, all of you. I think we're standing between you and cocktails, so I appreciate your being here this evening. Sure. Thanks also to our worthy opponents. The rules of Oxford-style debate are very clear. Those guys have the burden of proof. They're like the prosecution in a criminal trial. And if they haven't convinced you, I could literally sit down and not say another word and we would have to win this debate. Trust me, I am tempted. Because what you heard from our worthy opponent was nothing short of blather. And let me explain to you why.
Tell us what you really think.
They took the only real argument that exists for arguing that Amazon and Google and Facebook will become the financial tech giants of the future. The one argument being they know so much about us, which is absolutely true. This was an argument the World Economic Forum published in a report just last month saying essentially the same thing. Because they know so much, they are going to inevitably become the banks of the future. It's wrong for two reasons. It's wrong for a regulatory reason, and it's wrong for a cultural reason. Let me explain. On the regulatory side, today, if you look at those large behemoths, they are essentially regulated only very lightly and principally by the SEC in connection with the capital markets and providing liquidity to their shareholders. Now let's say they want to get into the banking business. Look at all the new names at the party. They want to do a national charter. That's the FDIC, the controller of the currency, and the Federal Reserve Board. They all have regulations. They want to avoid the Fed and go to the state. Well, now you're talking about every individual state department of financial institutions, plus probably the Office of Thrift Supervision and the Federal Deposit Insurance Company. All of that data they got, now they want to use it for something a little differently. Well, that's Regulation P and numerous opt-out requirements, the Bank Secrecy Act, and Know Your Customer. That's over 50,000 pages of regulatory mumbo-jumbo that, trust me, nobody at Facebook or Google today knows anything about. But wait, there's more. There are terrorism concerns. Now we're talking about anti-money laundering and the USA Patriot Act. You got to know actually who's on Facebook and Twitter. That's a big problem for Twitter, and it's a problem for Amazon as well. You've also got the Office of Foreign Asset Control, OFAC.
2 minutes.
Because they're very worried that you're inadvertently helping terrorists abroad. You want to take their money in the form of deposits? Well, now you're talking about the Community Reinvestment Act. You've got low-income customers. You've got truth in savings regulations. And you've got electronic funds transfer you have to deal with. You want to lend money? You're back in the states in the usury laws. Or if you want to stay federal, you've got Regulation Z, the Equal Credit Opportunity Act, and Regulation B, which tells you how you decide whether to lend money to these people or not. We're talking about another 45,000 pages of regulations, by the way. You're also in your legacy business. You're still posting social media or still selling goods. Now you're back in the bank holding company, and there are limits on how much of your regular business you can even be in. Nobody wants to do this. They've got a better business model today. Who in their right mind would want to go into the banking business? No less an authority than my worthy opponent, Mr. Minai, across the way, said as much in 2014 to the Financial Times. And I'm quoting, the number one priority for these banks is to stay out of trouble on anti-money laundering and Bank Secrecy Act issues. Quote, given the almost biblical vengeance the regulators can extract from you, it makes no sense to be in this business. I couldn't agree with him more. That's the regulatory side. Let's talk a little bit about culture. Who's tried to get Google on the phone? Anybody ever call Facebook? When I have a credit card issue, I talk to a human being. The last thing that happens when I've got an issue with Facebook is getting somebody on the phone. They don't know how to do that. They're not equipped to do it. They don't want to do it. Tech companies are good at what they do at selling you goods or providing social networks, or providing advertising. The wave of the future are rock star fintech companies like my partner's company, Cabbage, often as independent companies or partnering with large banks. Their principal competitor, OnDeck, partnered with JP Morgan because Cabbage was too much a formidable competitor. Wells Fargo partners with Blend so they can look more like Rocket Mortgage. That's the future. They'll either be independent, large behemoths, or they'll partner with money center banks and large banks today to compete more effectively. Thank you for your time.
Excellent. All right. So a fiery rebuttal from the side opposite. And we're off to a good start. And nothing quite like being hoisted on your own petard, I'm afraid, Noor. You should be careful in which kind of publications you talk to in future.
A sister publication, no less.
Exactly.
firewall
But
didn't
we
protect
did
him.
hear a clear set of arguments, starting with blather, and moving a little bit, let's say, upmarket from there to talking about the advantages of nimble upstarts like the ones we will hear from in a moment when this side has its turn. I did want to make one point of explanation. If any of you find it odd that I'm lurking around on stage like Donald Trump behind Hillary Clinton, the reason is the clock has been strategically positioned where I can't see it. So that's the only reason I'm hovering around in these odd ways. And I am going to be a tough taskmaster. Let me give you your allocated time, sir. Please.
Thank you.
Your honor has been challenged.
Absolutely. So here I go. First of all, I think the opposing side is a bit confused about the notion that the House put up, which is it wasn't do fintechs want to become bank, or it was who's threatened, what poses a bigger threat. So fintechs or the established platforms. The same economic report, the World Economic Report that you referenced, said that 40% of the folks that use Facebook, Alibaba, Amazon, and the other tech giants want their banks to become more like those Facebook type experience. And then the last point around nobody at Google or Facebook wants to be a bank. That's absolutely true. But do they want banking business? Yes. For about 5 years now, they've had a lobbying group in DC called Financial Innovation Now, and they're doing the type of stuff that banks do. So the truth is in that the major categories of payments, insurance, wealth management, and lending, fintechs are the pilot fish that serve a symbiotic purpose for banking and tech platforms in that they choose to handle the bits of the customer base too clunky, too expensive, or too risky for banks to safely and profitably serve. More importantly, they're the canaries in the coal mine to glean which models will stand the test of regulatory scrutiny. Let's begin with some perspective here. More than 5,000 US banks today hold roughly 16 trillion in assets. The 10 largest banks have combined market caps of 1.3 trillion. Meanwhile, Apple, Alphabet, Microsoft, Amazon, and Facebook have recently become the 5 most valuable listed companies in the world with a total market cap of nearly 3 trillion. They're worth much more than any of the 5 firms in history, bestowing upon them unimaginable purchasing power. In sharp contrast, the vanguard of fintech are only worth a tiny fraction, with most hovering around 1 billion. Markets have figured out that the future of fintech is in partnership with the banks, or as a component at one of the tech giants such as Amazon and Facebook. They're not a threat for the main reason that the models simply cannot scale and meet the test of regulatory scrutiny.
2 minutes.
Fintechs struggle to achieve scale at Uber levels valuations precisely because the banking and consumer protection agencies are not the taxi and limousine commission. The regulator's message is increasingly strident. If you want to offer banking services at scale, you either need to be a bank or a bank's tier 1 vendor. So let's turn then to the threat posed to banks by Amazon, Apple. The average adult looks at their smartphone 46 times a day. And 40%, as I said earlier, of those adults want their banks to look more like Amazon and the experience that they get at Google and some of the, when they're holding phones in their hand. So the threat then is that these giants, these tech giants, will pick up the interesting bits of banking that are core to their own strategies. Amazon sell more stuff, Google sell more ad revenue. None of them, with the possible exception of Alibaba, want to become banks, which is the central conceit that the opposing team gets wrong. And they couldn't become banks by regulation if they wanted to, and they're too smart to become banks. Instead, their game plan echoes that old Diet Pepsi ad: all the taste, but none of the calories. Much better to own the customer and saddle banks with the archaic infrastructure, unpredictable credit cycles, range-bound credit capital markets, and multi-regional regulatory gauntlets. One could reasonably argue that the tech giants are already in the banking arena. The world's largest money market fund is Alibaba's 4-year-old Yui Bao with 165 billion under management, compared to Chase with just 150.
30 seconds.
Alipay and WeChat process 3 trillion in payments. Amazon has 3 billion of small business loans. They've partnered with Stripe. BlackRock has bought fintechs that interested them, like Future Advisor. So are fintechs an existential threat to US banks or banks around the world? I don't think so.
All right. Thank you very much.
Thank you.
I'll slide over.
Somewhere between the pilot fish and the canaries, I suddenly got very hungry, but you offered me some zero-taste cola, or was it zero
Absolutely, right.
calories? I can't remember. So let's have the final opening statement, please.
I think that our opposition is a little bit confused themselves because we're clear on the debate. The debate is about whether or not the large incumbents, the tech companies, would be better at disrupting banks than the fintechs. And obviously, speaking as a fintech, I want to make sure you understand that you don't have to be a bank to be heavily regulated. We're not a bank. Every single regulation that David mentioned is something with which we have to comply at Cabbage, and we're not a bank. So simply engaging in this market requires that you are heavily regulated whether or not you decide to become a bank. I think the proposition presupposes that the large technology companies want to engage in these banking activities or fintech activities, which David aptly disputed, but that companies have the ability to quickly innovate and enter new markets they've previously not occupied. Let's be really clear here, banks are utilities. They provide commoditized services like money transfer and payment processing and deposit services. They're not doing a lot of unique things, and they're going to be disrupted, and they're going to be unbundled. And the question is, who's going to do it, Apple or somebody like Cabbage? I think that there are a couple of reasons that this premise is wrong. There's speed and desire. Let's talk about speed first. Large tech companies are interested in dominating global markets and acquiring and retaining customers, but they're of such a size at this point that they don't have the luxury of rapidly testing new products in new markets where there are established incumbents. Large tech companies have massive infrastructures, compliance departments, internal processes, and product development methodologies that make it very difficult to quickly test these things. And think about what's involved in developing, let's say, a lending product, a non-bank lending product, just a lending product. Yet you need experience in the lending business. You need willingness to accept risk. You need to develop lending algorithms, a lending technology platform. You need funding vehicles, whether that's a debt facility or existing liquidity or marketplace investors. You need a regulatory framework in which you're operating, a state lending model or a bank partner model or hopefully not a bank acquisition or a de novo, not that one of those has been issued in the last 10 years. A customer acquisition strategy, customer service and collections. As David pointed out, the requirements vary by country, so expanding globally is a real challenge. It takes years to properly develop a lending product with a proven track record of success, and investors in public companies, which these all are, don't have the patience for that. So let's talk about desire. Large, especially publicly traded tech companies, don't want to develop these types of products. If you think about the FANG-type companies, they're publicly traded, massive investments in financial services products might not be viewed kindly by investors. There's a regulatory burden, there are funding requirements, and let's talk about valuation. Do you want to be valued as a balance sheet business or a tech company? I think mostly they want to be valued like tech companies. So further, the companies have an established track record of acquiring technology companies that complement their offerings because it's simply faster and more efficient. And notice these acquisitions have been very critical to their core business model. Plus, they get to pick the winner. Facebook bought Instagram, Google bought Waze, Amazon bought Kiva Systems, a warehouse robotics company, Apple bought Beats. These companies were actually core to their key strategies, to their key business. It wasn't just a small fintech add-on. However, some technology companies have demonstrated interest in financial services. Amazon offers loans to its third-party sellers. Google offers credit cards to its SMB customers. Apple offers mobile payments to anybody who has an iPhone. Facebook users can send funds to one another via Facebook Messenger, but none of these products push significant revenue to the bottom line of these businesses, and they're not, especially not compared with their core products. And also, they're usually dependent heavily on third parties.
30 seconds.
So in summary, the large companies can't develop non-core products rapidly enough to satisfy their public investors, and they tend to acquire companies that are core to their business. So it will be the startups, it will be the fintech companies that dominate rather than the large players.
Very good. Thank you. Final opening remark. So the giants don't really want to do these products and services, and where they do, they don't really make any money anyway. They'd rather be valued as tech giants. That's the nub of it, the argument we're hearing in the final opening argument. Now we're going to get to the more lively section, if I may say so. We're going to get to the rebuttals. I will give you 3 minutes. However, you can share as you wish. But in the interest of livening things up, I will allow, if the side opposite wants to interject 30 seconds to complain about something being said, and I will give you equal time during their rebuttal as well. So let's see if we can mix this up a little bit.
While they're speaking, we can interject?
Yeah, wave your hand if I recognize
Got it.
Yeah.
All right, so let me start by thanking David Golden for saying that I was blathering. Because in my experience in debates, when your opponent starts by insulting you, it means that his arguments aren't very good. And he ably demonstrated that because he went on for 3.5 minutes about all the regulations in financial services without telling us anything about why fintech startups have an advantage over the large platforms. So I didn't hear that, so I really don't have much to rebut. I mean, I agree. There are tons of regulations, but why are fintechs better positioned? I didn't see that. On your point about customer service, I have called Amazon, and I've gotten very good customer service from them. I also know that AI is the future of customer service, and I know where the best AI brains are. They're at
I'm going to let him jump in
Google.
here. You have a complaint about his opening comment?
I'm a little confused. Arun, could you just read the proposition one more time? I'm just a little.
Well, I don't read the proposition. No, I don't want you to waste my time that way, so I'll let you remind
Let's
them.
not
but
confuse ourselves with the facts.
it's certainly not Facebook and Google are sort of are challenged at entering regulated businesses, and that was your argument. So I'm going to reiterate 2 of my 3 starting points. The AI interface is going to concentrate every industry in the hands of the platforms, whether it's retail, whether it's healthcare, financial services will do that. And I don't see how a startup can replicate. Maybe it takes time to build a successful consumer product.
90 seconds.
But it takes longer to build a mass market trusted consumer brand of the kind that can take over financial services.
And you talked about the fact that you are already regulated. Unless you've been through an agency, a financial agency's exam.
I have 3 FDIC audits.
So you're probably an exception. But the fintech companies, the FDIC has no charter to come and examine you unless you're doing a social type of audit. The CFPB, unless you're a covered category, you don't get examined. So the notion that you're already heavily regulated, I must say with respect, you have no idea what you're talking about. Because we go through exams, 4 exams a year, and we get visitations. So these are, and the level of detail, they come with 24 examiners, and they sit there for 8 weeks until they find something to criticize. Until you go through that, you cannot say you're not regulated.
I didn't say I wasn't regulated. I said I was regulated.
Sorry, that you're as well regulated as we are.
Well, I'd like to
Take the remaining time.
I'd like to go ahead and suggest that we're appropriately regulated. We only do one thing. We lend. I don't need to be regulated for taking deposits, for transmitting money, for processing payments. I'm regulated for lending, and I get audited for that. And I spend a ton of time in D.C. working with every 3- and 4-letter, emphasis on 4-letter,
But doesn't
agency.
Amazon lend more than you?
I beg your pardon.
Doesn't Amazon already lend more than
No,
you?
actually they don't. We have
They are
lent
the
more in our
largest small
background.
business lender in the country.
And
How much
they
have
do it for profit.
They're the largest
$3
small
billion,
business-
$3 billion,
I've-
and they lend it for profit.
I've loaned almost $4 billion.
So one of your notions was that they lend and they lose money. They lend so people can buy and sell more.
Exactly.
Right?
So they're not
but that adds to
interested
the
in
profit line.
disrupting
That's
banking.
net additive.
Isn't that a cross
Yeah, so
subsidy?
but the fact that they've got this complementary business gives them an advantage, not a disadvantage in the lending business.
They're not really lending.
Push
either.
on with your time. Now we're into your time. So.
Sorry, no problem. Well, they're not really lending, by the way. It's a merchant cash advance, which is a business agreement between 2 parties, so they're not regulated at all. They're able to skirt that in
Potato,
that
potato.
particular way.
Well, that was
which
our
we don't.
point.
But at any rate, we've been through multiple audits because we offer a bank loan. And so as a result, we are regulated like any other bank, and it takes a really long time.
The bank is, you're not regulated.
Hold on.
But
This is her time. So
But the argument that this artificial intelligence, the development of all this data and all these models is limited only to the big guys, I think is kind of crazy because all the data that they have is available to everybody else. Open APIs allow third parties to get access to all the same information. So anybody who's really good at AI with customers' consent can get access, which I do, to Google data, to Facebook data. I do this today, to Amazon data, to banking data. Anybody can build models that can effectively use this data to target customers and to give them the products that they want.
Can I
yes, you
interject?
do. You've still got 2 minutes. Go on.
Okay.
And I'll give you a chance to intervene. Let them get their flow of argument going. You're still responding to your spurious and provocative
I know, my blather.
assertions.
So,
Yes,
yeah,
go on.
I was just quoting the expert, forgive me. I'm going to refresh people's recollection. The proposition is the House believes that Alibaba, Amazon, Apple, Facebook, and Google are a bigger challenge to traditional banks than any fintech startup. That's what we came here to debate. Maybe they should have put all 4 chairs on our side of the podium because there's been very little engagement. We took you through the reasons for regulatory, cultural, and economic why that's never going to happen. And their response was that they are very big companies. Yes, they are very big companies. They also told you that 40% today say that they would like their bank to feel more like Facebook. I'm surprised it's not more than 40%. Why isn't it 100%? I would like it to feel more like Facebook, but that's not the point. I'd like to jump in a Hyperloop train and get to DC in 80 minutes when I finish today. That's not going to happen either because you have all of these other external contingent variables that dictate what's actually possible. Facebook cannot, Amazon cannot get in the banking business, and they won't threaten the banks. As Catherine indicates, the partnerships such as small fintechs have already developed, and some of the larger fintechs have already been purchased, demonstrate that the large banks will continue to dominate the space for a host of reasons, not the least of which is they know how to do it, and these smaller companies, or these smaller banking potential financial companies, but much larger tech companies cannot.
All right, I'm going to...
So this is a
Okay, so wonderful, David. So you've just told us that the banks will continue to dominate. How are you arguing? I mean, there's no argument here that the fintechs pose a greater threat. So if fintechs succeed and they get absorbed by the banks, how are they a threat to the banks?
Well, I believe Catherine.
That's what I mean. Vijay didn't say semantic debate.
This is a substantive debate. I mean, if you're imagining a world where fintechs are sort of like flourishing and getting acquired on the one side by Apple, on the other side by the banks, they pose no threat to the banks.
It's a threat to bank revenue. Because, as I mentioned, unbundling is important. Because today banks make small business loans. And I'm using lending as an example because I know that space. So they make small business loans, but not to the customers we serve. They'd like to make them to the customers we serve. Even the big customers they do serve would rather have the experience that we offer. And so the banks struggle to do that. They have to pay us to do it.
But that's absolute poppycock.
This sounds a lot like Hyperloop, actually.
That's absolute poppycock.
I would call it Hyperloop, actually.
Let me just tell you, we've entered the stage of bar brawling in this.
I'm going to come to finishing
your questions. Get some questions ready.
Right, but
the big platforms don't have open APIs to all their data.
Right.
For their customers, they do.
That's a fantasy.
Google data, Amazon, Facebook today. Come to my website, sign up, you'll see.
All right.
And just to address this thing about banks losing revenue, they have not. The whole point about talking about valuations is that the bank valuations are growing. These are customers that the banks today aren't serving, so you're fulfilling a social purpose. But these weren't a core strategy of the banks to grow revenue. They're growing revenue the way they've always grown revenue. You're fulfilling a social purpose.
By cheating?
This has nothing to do with cheating.
What
does this have to do with cheating?
Let me turn to the audience. I have noticed a tendency on this side of the aisle to use time for heckling, including an intervention dressed up as a question for the other side or a challenge that was merely a heckle. So the chair has noted.
Would you like us to
let's get a question from the floor. Please tell us which side you would like to offer a challenge to. And let's see if we can make these guys sweat a little bit more. Who has a question? Who's heard something that you just really didn't agree with? We think one of the sides is off on the wrong. Let's get a microphone to this gentleman, please.
Hello, this is Ash from Google. So,
don't be evil.
Yes, exactly. I won't be evil, but
who's the question for?
I want to talk. I agree with them.
So you're
and
challenging
the
them.
question is for them.
So put the question.
Right?
I think the debate's over.
So the question.
You guys plant this
But
guy.
I don't want to talk. I don't want to. I'm not representing Google now. But from what I know, we do not have API to give access to all our data to anyone.
Not all your data. But web analytics data, our customers today come in and they log into Google and they share their web analytics data with us so we can use it to understand their business performance. We do that today.
It would be your own data. We're giving you tools.
No, it's not ours. It's the customer's data. So the customers authenticate with you and they authorize you to share the data with us. It's their data.
Correct.
Yes.
But at
So
the end of the
that's
day,
Google
they are your customers.
You guys didn't do a good plan.
So
The other.
All right. So sorry. Anything you want to add to that, or a sharp point you want to put on that?
Yes. There's another perspective to why Google could be like a big threat for traditional banks. Because one, we have our payment solutions. You have Google Wallets. You have a lot of payment solutions that acts as fintech solutions. The other thing is we work very closely.
So
with
I want to hear
fintech.
a question, though. You're just flying your flag here. Let's hear a question.
No, I don't have questions anymore.
All right. You don't have it. You got nothing.
I just have an argument.
Okay, we have a lady there. Please give us your name. Make it a good question.
Hi, I'm Diana Glassman, and we were at the Mighty FinTech Types. So For the pros, 1, too big to fail, and 2, European expansion due to privacy violations, $2.6 billion Google fine, Apple under investigation. How are you going to overcome that?
So you're mistaking us for banks. We're not banks on this stage right now, right? We're just making the case that if Facebook ever wants to take away the profitable pieces of banking, they can.
But
That's
wait
the
a second.
proposition.
So they're getting in trouble with WhatsApp and in Europe again. So how on earth can they?
In China, that is.
How
So
on
once
earth are they
again,
able
what has
to
that got
take
to do
over
with the
this?
price of tea in China? What does WhatsApp getting in trouble have to do with my subscribing to an Amazon Visa signature card? You have to be kind of clear about, cause and effect here.
I thought you were going global.
Who's we?
The technology companies in Europe.
They are global,
And their
right?
brand is so great.
So they are global. They're picking and choosing profitable services, financial services to offer. And yes, there might be some negative halo effect if WhatsApp has a technical glitch. But to the extent that self-interested customers want the best card out there that gives them 5% cash back and lets them sell more of their stuff, they're going to go with that card.
License to operate. Look at Uber.
Well,
Once
we're
again,
not,
what does
we're-
Uber have to do with?
We're not talking about Uber here, right?
Yeah.
I mean, they've got control of the interface, they've got the better data, they've got the trusted customer brand, and they've got the better AI. I don't see how a fintech company can pose a bigger threat to a bank than this. Maybe there will be bumps along the way, but that doesn't mean that the fintechs have any additional advantage over the platforms.
Well, how do you answer
which
that
is
question?
the
So,
house proposition.
They've finally been able to get their question together for you. About a lot of meandering. How do you pose a bigger threat? That's really the question, right? It's comparative.
It's
Can you explain that?
Experience and speed, the ability to move quickly, nimbleness, I think is really important.
You have more experience than Google.
At financial services, I
At financial
do. At
services,
lending,
yeah,
I
that's
definitely
on the
do.
table.
So they
And
do-
it takes a long
so
time
do
to
they.
develop that knowledge, and so they would have to invest in that, and it would take a long time. And they're public companies. Their investors would have to be comfortable with that investment and with the contingent liability that it brings to the organization and the potential valuation change.
Yeah, fintech these companies by definition are smaller. They come out of the startup world. So to compare them to JP Morgan's been around for a couple hundred years on market cap seems to me to be that's a rigged calculation. But they're mighty, and they have the potential to be mighty, whether it's Cabbage or a company like Square. Those are more threatening to the core businesses of these large banks.
Yeah, in the
How are
same
you
way that
threatening
it
if I
seemed
can,
like
anytime that you pose a threat to me, with a corner of my cash hoard, I can
You can
buy
buy them. You
Yeah.
can buy them.
So
Well,
how is that a threat? A threat is something that is mortally troubling to me.
I mean, by
that
your
can cause-
argument, PayPal should have been the biggest financial institution in the world today because 20 years ago, they started with an underserved market and they sort of tried to disrupt financial services. They are successful, but they do not pose an existential threat to any bank as yet.
Well, I don't
and
think-
they haven't
Let's see.
along the
Let's
way.
see if there's another question from the floor. Do we have another question for one of the sides? This is a gentleman here.
He works for Facebook.
It's okay. I don't. We ask people to identify themselves. So
I don't.
At The Economist, we believe in free debate. So go on, sir.
Hi, Ted Pantone with Microinsure. Question for the con. If Amazon launched a Cabbage-like loan product, would they beat you?
They did launch one already, in fact. And in their own population of large businesses that sell on Amazon, of course they're going to beat us. They can offer better terms because they're not trying to make money on fees. They're trying to generate more sales on Amazon. The difference is they can fish in their pond. They can offer stuff to their sellers. Now, 2/3 of their revenue.
Their pond just is the whole
Hold on,
world.
hold on, let me-
Two-thirds of their revenue. Two-thirds of
I'll give you a
Big
chance. I'll
pond.
give you a chance.
So 2/3 of Amazon's revenue today, on their e-commerce site, comes from third-party sellers. So it's important to them. It's a big business, but it's only their sellers. That represents a small percentage. 8%. E-commerce is 8% of all retail sales. So there's a huge opportunity that Amazon can't reach because they don't have those customers. They don't have that data, and they aren't able to force them to shop at the company.
All right, your rebuttal.
$42 billion worth of sales go through Amazon, right? On the commercial side, they encourage you they pre-select you, pre-approve you, look at what your sales are, and only then do you get credit. The point that Cabbage has the same model, but where their disadvantage is that Amazon is looking at real-time data. whereas they have to purchase that data or get other people to open up their data sources to
In real time.
Can I add one?
Okay,
There's real time and then there's real time.
We beat the data horse to a pulp at this point. Let's get another question from the
Yes,
floor.
my question is to the con
Who are you, sir?
side.
Who are you? We
I'm
need
Frederick
to-
Voss from NASDAQ.
Okay, all right.
But I'm here as a private person. So question to the con. What capabilities do the FANGs lack to be a greater challenge to the incumbents than the startups?
Let me start, but feel free to chime in. And that's essentially an echo of the argument that they've now finally settled on, which is the installed base of these large tech
I think it
companies
was clear to everybody.
Hold on,
but
hold
you
on, hold
did.
on. Let's
are,
hear his argument.
are so
Everybody was
substantial
nodding.
that nothing can be a threat because they'll always buy the startup or the potential threat. Well, I guess that's true by definition, but they said the same thing about IBM in 1980 and the same thing about Microsoft in 2000. So that argument proves too much. Your point is what
Both of which are
capabilities do
still
they
around.
lack? Yeah, well, they don't lack capital, and we don't mean to suggest that they do lack capital, but they lack a culture that embraces a regulated environment, which they have a violent allergy to, and they lack expertise. Can they acquire it? Of course, at some price, they can, but they don't have it today, and they don't want to be in these businesses.
So it's really about culture and aversion to regulation. And we've heard something about desire for valuations in the past as well.
So some price.
Let's hear, see any more questions from the floor? I see a gentleman in the back. Sir, let's get a microphone to you. And particularly, it'd be good to get in equal time a question for that side. Which side is it for?
For the pro. So I'm
Okay,
Luis
good.
Zingales, University of Chicago. I buy all the technical argument Arun brought, but there's a big elephant in the room, which is the political economy. So the reason why, by the way, IBM did not dominate the PC market and Microsoft did not dominate
the mobile market,
the internet is because there was an antitrust suit against each one of them. So the fundamental point is, can those giants enter the banking sector, the profitable sector of the banking, without triggering a political response or not? And you have not discussed that.
So we have discussed it. There's a very powerful lobbying
That's a
group
good
called
point.
Financial Innovation Now that is populated with some of the best minds in technology, in the legal services and government that is working with the public-private partnership to advance the viewpoint of the tech giants. It's made up of all the guys, including PayPal, all the guys we mentioned, including PayPal. So these are very, very hyper grown-up people. They're very serious people. They might wear T-shirts to work, but they're very, very serious people, and they know what they're doing.
Hold on, though. All you
And
said is that
but
they're
sorry,
very smart
Rockefeller-
guys.
Rockefeller, sorry.
But you haven't spoken to effectiveness.
No, I think that
Yeah,
we are entering sort of this populist phase in the sort of like the antitrust world where I agree, the platforms are going to sort of see over the next 5 years some sort of antitrust pushback, and this may slow their path, but I don't think that it's going to be a sufficient deterrent for them to be able to sort of lose to startups who are trying to take on the banks. I don't see that it giving fintech startups the advantage in taking on the banks.
But
I
what-
agree that Microsoft
Why?
may
Because in
have-
the past, I gave you two examples in which in the past, the antitrust action gave an advantage to newcomers. These were sort of Microsoft when it was IBM, and then was Google and Facebook when it was Microsoft.
I know, but-
so
but the-
if there
the-
is a serious antitrust,
The place that it slowed them was in extending into the next generation of technology. Like Microsoft didn't dominate mobile because of antitrust concerns. But Microsoft, it didn't sort of prevent them from expanding their business into other lateral areas.
Plus, they're already in these businesses,
Yeah.
right?
You-
This
you-
isn't
you'd have
about
to-
entry. This is about expansion while an incumbent.
I mean, it takes a lot. You're an economist, so you know what I mean. It takes a lot to prove tying here. I mean, you've got to be able to come up with a tying
And
argument
natural
before
monopolies.
yeah.
Right.
So
Can you
the
prove this is a
political
natural
environment
monopoly?
is clearly not favorable, but it sounds like your argument is it won't be enough to retard
Yeah.
your advantage,
No,
is what
it's
I'm
a good
hearing.
point, yeah.
Who's got another question
that I was hoping
that
they
you want to
would
put
make.
to
Yeah,
either
And
side?
there's no natural monopoly.
We just have a very short amount of time left. Very good. Then I think we will move to closing arguments. I think you'll all agree we've had a good airing of the views, even some dirty underwear,
should go
perhaps.
first.
Let's get one side. Opening side, as always, you have your 2 minutes.
Sure.
Go.
So I think
Collectively or individually?
You have 2 minutes, that's it. So you can
Okay.
split it or one guy does it.
I'll just make it very short. I'll just recap the argument. We've just had a monumental semantic debate, which is they misunderstood what the whole notion was, which is who poses the greater threat, not who wants to be a bank. And the greater threat is the people who have the capital, the talent, and the captured base of customers. And these are customers who want to be served by them rather than a monoline, monomaniacally focused fintech that they maybe run into when they have a need. So that was the argument. I think we made it, and I'll turn over for the rest of the time.
Yeah, I think that there's, we didn't hear a good counter argument to any of our core points, which were that as AI interfaces start to take over the world, there will be a concentration of applications, including financial services applications, and the platforms have an advantage in any industry, including this one. They have a data advantage. Whatever the APIs that you can sort of use to tap into your own customers' data, you're not going to have the same level of managing risk intelligently as a platform with 1 billion customers. And they have the trust advantage. They are branded, mass market, highly trusted. Think about the trust that you place in Google and all the information that they have. It is going to take decades for a fintech startup to get to that level of trust. And
30 seconds.
So, I think that if you believe that trust is central to being a successful financial institution, data is central to managing risk, and that new interfaces will cause things to concentrate, then these three are sufficient to support our argument.
All right. Very good. Give them a nice round of applause for their closing arguments. Tying a bow on their arguments. And now we give the same privilege to you, however you see fit. 2 minutes for the closing team.
Thank you, and thank you all again for spending some time with us this afternoon. Taking a selfie is different than handling people's money. It just is. The risks are different, the rewards are different. And the fact that these 5 large companies have a lot of capital and could buy their way into this business doesn't mean that they will and doesn't mean that they should. The threats posed by fintechs are not necessarily existential threats, although it's not impossible to imagine that possibility in the next several years. The threats they pose are competitive threats, and that's where banks are responding. Banks don't care about Facebook, banks don't care about Alibaba, and banks don't care about Google. But they care about their mortgage business, so when Rocket Mortgage starts taking share on your phone and advertising it all times of day and night, Wells Fargo partners with Blend Labs, a little startup in California, not in my book, by the way, I'm not talking my book, to develop a similar product. When Cabbage gives JP Morgan a run for its money because it's not cost effective for JP Morgan to handle small business loans, JP Morgan partners with OnDeck. Those are the existential threats and the non-existential threats that these banks are playing. It isn't the large technology companies. Thanks again for your time. We very much appreciate it.
Well, we have 1 more minute.
Oh, did you want? Oh, I'm sorry.
Sure thing.
Yeah.
So the pros keep saying that we're suggesting that these technology players want to be a bank. I don't think they do. I think what's important to understand is that regulation is simply part of any financial services offering. You're going to be regulated whether you're a bank, whether you're not a bank. That's simply what happens. I think it's also important to note, part of the argument is that they have all this value in the data they've collected, and open APIs are beginning to sort of democratize access to that data for lots of folks. PSD2 in Europe is a great example of that, where bank data is being opened up to third parties by mandate. And I think also there's this unintended regulation that you wouldn't expect. Facebook doesn't want to be a credit reporting agency. They don't want to share data or use data to make credit decisions, because if they do, then they suddenly have to comply with CRA requirements, and nobody wants to do that. Equifax, for example, is a CRA. I think there's a lot of liability there.
Right, very good. Give them a round of applause. Bringing it home by reminding us that half of us in this room have had our private data exposed in some absolutely unethical way.
And Equifax used to be a
hold
fintech
on.
once upon a time.
There's no more opportunity for your rambunctious
blather.
Blather, exactly. The only one who shall blather from this point forward is the chair.
Yeah.
And I continue in the interest, of course, of all of you good people. You have heard both sides. You have seen the arguments. You have seen the bluster and the blather. Now it comes time to vote. You will decide the future of finance here today.
Vote wisely.
I'm going to repeat the proposition in front of this House. And again, it's a forced vote. Please vote one way or the other. This House believes that Alibaba, Amazon, Apple, Facebook, and Google are a bigger challenge to traditional banks than any fintech startup. Hands up. How many of you vote with the pro team? Hands up. Make some noise. Support your... All right, okay. Let's see. How many of you disagree? How many of you vote with the con team? You too. Make some noise. I want to hear it.
Yeah, I got a few.
I have to say they have picked up support. I'm going to call it 80-20. The winners are the team opposite the motion for having moved the needle. But I must say, it was a closely fought affair. Give a round of applause for the pro team as well. They were great sports. Thank you all very much, ladies and gentlemen.